What's going on? We are here, episode 2 of season 3 of the Dropping Knowledge podcast and the Dropping Knowledge Network. We are here today to talk to my man, DJ Murphy, Don Murphy, about the insurance game. The insurance game is what we're going to be talking about. I'm going to touch on some things that I think are pivotal, things that most of us know we have to have insurance. We don't necessarily know the ins and outs, what things affect our insurance rates, et cetera. And so we're going to get educated today. And to educate us, we're going to talk to my fraternity brother and good buddy, Don Murphy Jr. How's it going today, Don?
Good, man. Good. We've been running crazy with the claims and a lot of water damage claims running around this week and trying to take care of our customers. But it's going good.
That's good, brother. I appreciate you taking some time out with me today to give us some game, and that's what I want to talk about today. I know that you handle insurance in many different areas, but I think for our audience today, we're going to focus more on auto, home, and then for those investors or real estate investors, we're going to talk a little bit about that as well. And so before we get into the meat of our conversation, How did you find yourself to get into this business and this line of work?
Well, I guess I got to give some accolades to you, man. You got me into the game, as far as sales coming out of U of I.
No doubt.
Helping me to get on with CDW. And I learned a lot there from, being able to duplicate myself and being able to learn systems and plugging people into products and services that were suitable for them. I learned how to work my way up through an organization and be successful in that. So working with, from business to consumer and other small businesses, it was a kind of natural change for me. But what happened when I was a sophomore at U of I, my mother was seriously injured in a really bad car accident. She was basically almost sandwiched in between two cars. And so what kind of transpired after that was just learning more about coverages, being adequately insured, because you can be with a good carrier and still not have adequate coverage. Learning about the personal liability umbrella products, learning about underinsured motorists and underinsured motorists, because quite frankly, getting behind the wheel of a car is nothing more dangerous you can do on a daily basis. And that kind of happened, man. And now fast forward to 14 years later, here we are, licensed in 20 states, a team of 5, including myself, and we're growing. So we've been taking care of our customers, but we wouldn't be able to do any of this without the support I've gotten from my U of I alum, my fraternity, my family, and my friends. So thank you to anyone watching and for the people that have supported us over the years. I appreciate you and allowing me to take care of you and your families and businesses.
I love it, brother. So anybody tuned in right now, whether you're watching this live or you're watching this on a replay, make sure that you are alerted anytime that we drop a new episode. So follow us on Facebook at the Droppin Knowledge Network. Follow us on Instagram at the Droppin Knowledge Network. And then go ahead and search us on YouTube as well. Go ahead and search Droppin Knowledge, either podcast or network, and you will find us. So DJ, kind of, I'm gonna act, most times when people go to get insurance, right? You just look at it, insurance is insurance, right? And you're probably going to tell me something different, but what are the differences if you're talking about for the general consumer, not someone like yourself who's been in the business? What's the difference between, if you're talking auto insurance, the Geico, the State Farms, the American Families? Kind of talk about that a bit and what people should be looking for when they're deciding on where should I insure whatever it is at.
I think the relationship is key. The relationship you even have with the individual agent, that office, or the carrier, because what needs to happen is as your life changes, and so does your needs. Imagine what your life looked like 10 years ago or 15 years ago, whether it was a condo that you own now or 2 vehicles that you own or a business or a rental property that you picked up. What's very essential is the relationship to have open dialogue and communication. For me to earn your business year after year, review your policies and making sure that your coverages are staying in line with the changes that are happening in your life. And oftentimes that's what happens. We get into a policy or we get into a product, and that's what happened to my mom. She was with a great carrier,
right,
but it never revisited the policy. She just knew she had the best carrier, the biggest carrier, and she just never touched it again. So to me, I think the relationship is key, where the agent will reach out to you, or that individual will reach out to you at their office and at least review those policies with you over the phone. Virtually, we've been doing a lot of personal insurance reviews, commercial insurance reviews, making sure that our customers are protected. We saw a lot with the civil unrest last year with our business owners, some of the riots. So, you know, it's constantly changing. The product's changing a lot. And what it looks like now, because I've never been to places like Oregon and Washington, but we have clients there now. So we have to understand some of the products as it pertains to that area, specifically in endorsements. And then too, like staying out in front of it. Like price is not the only thing that matters, but there are certain things that you can do to keep that premium low. Like not just filing claims every single time you get a ding or a scratch on your car, getting estimates first, and getting advice. So I think in the age that we live in today, in the technology age, there's too much information out here for us just to walk blindly.
Yeah. Yeah. You dropped a lot of nuggets, Noop, and I want to jump into to each of those. So let's say I buy a vehicle, right? And I come to you for insurance on that vehicle.
Mm-hmm.
What are you looking at about me that's helping to set that rate?
Well, we definitely have to pull a motor vehicle report.
Okay.
And we're going to pull an accident claim loss report. That's kind of going to be your health check for the baseline of insurance, right? There's different rating variables that go into there after that. So where the person might live at, what type of vehicle it is, coverages as far as like bodily injury, property damage, and then kind of deductibles. Okay. And what's new today, kind of cutting edge that we see, not just automatic payments and paperless billing. A lot of the carriers today have smart driving technology that can help drive those rates lower. So it might be a device that you plug into your car using your smartphone, but a lot of people don't know about this because they may have not had a personal insurance review, but your carrier likely has it, where you can sign up for driving information to be shared between you and your carrier. And at renewals, you can earn anywhere between 10, 15, 20%. So what's important when I look at to build your rate, and as I'm explaining that, I want you to have paperless billing. I want you to have automatic payment. If a client can afford to pay in advance, we do that. But then we try to also look at bundling. So it's not too common where we may have a homeowner's policy with State Farm, and then you have your auto here with American Family.
Right.
Or have your home here and then your auto with Allstate. Bundling a lot of times in the insurance game allows you to drive those premiums lower and give you the best bang for your buck. Okay. But one of the things I still look, I almost don't even like winning a deal straight on price, because I learned this at CDW. How you get a customer is how you lose them, right?
Right.
So you want them to we want a fair price, we want a competitive price. But I want, if something happens to you, I can come and take care of you. We can make sure that we can get somebody out there to help mitigate those damages. If it's a car claim, we can get you back in rental on the same day. The next day, a client of ours shared a story on Facebook today. He had his roof collapsed in yesterday. He filed a claim. It was really heavy snow. Claim adjuster was able to go out and visit with him today, wrote him a check on the spot, all within 24 hours. So even when I'm interviewing a client and we're trying to see if we can bring them on, whether it's, we're writing a Dunkin' Donuts or a Culver's, or we're writing somebody with 4 cars and a rental property, it's important for you to interview me just as much as I'm interviewing you. So look and make sure that carrier is at least A rated or better. See how they pay their claims. Go out and do some research. Talk to your friends. The thing about carriers, you'll find out a lot of information. You might see some negative stuff, but the companies that rate us based upon claim activity and customer service, those items don't lie. They tell a bigger story and a part about how we're going to perform for you in the time of your need.
So again, you're saying a lot, you're dropping a lot. So it sounds like if I'm coming to you for insurance, I should really come to you with the mindset of I should probably try to insure as much as I can with you, meaning if a car, a home, because there's going to be savings versus kind of splitting those things out to different carriers. Is that pretty accurate statement?
Yeah, in most cases it will. By bundling, you're going to drive your rate lower. Typically combined savings on home and auto, most carriers anywhere between 25 and 30+ percentage points.
Okay.
So, and likewise, when we have a carrier that might switch to State Farm or Allstate, we know if we're going to lose that carrier, we're going to lose the home and the auto. So one of the things that I'm really, really big on with my team and I give so much credit to my team. I wish I could say that I wish I can give them all the praise right now and have them here, but they're home with their families. But they do an excellent job of taking care of our customers and making sure that the promises that we sold the policy on, we can deliver it. Right.
Right.
And so what we know is that I'm really big on customer retention. It's great to get a new client, but we love to take care of the ones we have and kind of grow organically that way. Right. With positive referrals and stories like my customer shared on Facebook today, like real stories. Like, it's great to bring a new customer in, but I'm really big on retention, and we've seen those retention numbers grow year over year. We're losing less and less customers. You'll have attrition in anything, right?
Right.
But the reason why we have such a high retention and always have is because we try to take care of our customers. Do we do a perfect job? No, but I'd stack my agency up against most.
Got you. So in that process, I think of what you talked about in terms of building that rate, and I experienced this personally with you, right? So a couple of years prior to starting my own financial literacy and credit restoration company, came to you about this Tesla, right, that I purchased. And I don't know, you told me about $10,000 a month.
It wasn't quite that much, man. It was pricey.
It was expensive. It was pricey, and I had okay credit, right? I had okay credit, and I remember coming back to you some months later after that credit improved, and I saw a huge discount. So how big for people watching today that may not even know that their credit is impacting their rate? Is there a certain percentage? I know you talked about neighborhood, I'm sure age, but how big of a deal is credit when it comes to that actual rate that an individual pays?
Credit's a big deal with everything right now. There's some jobs that will check your credit and deny employment.
Right.
They're looking at credit for contractors when they go get bonds and stuff like that. But as it pertains to your personal home and auto, it's huge. It's huge. And I think I don't know if you did. I could have swore you shared your actual score differences before and after.
Yeah. It
can drive a rate significantly. So if you have had credit improvements in the past X number of years and your carrier has not rerun your rate, you can go to them and ask them to reconsider your credit rate. And typically it's going to be at a renewal time, but that can drive your rate down. So we were able to save your business, Knowledge. You guys know Knowledge. He likes to drive a nice whip. So, we did a credit reconsideration and we drove your rate down big time.
Yeah,
it's huge, guys. And I tell you just as much as I say to be mindful of how many claims you're filing and the type of deductibles you're taking, that credit is everything. And you can really cost yourself so much more money. And right. And when you look at like a finance rate on a new car, or even some of the people that are getting better rates today on all the historical amounts of refinances that we're seeing.
Yep.
The better your credit is, the more money you're going to save yourself.
Right.
In the long run. So it's a really big factor when it comes to insurance-based credit scoring. That personal credit worthiness, it tells a very big picture. And I know some people are like, hey, well, what does that have to do? I've taught homebuyer seminars about this all the time. And people are like, well, that's not fair. Credit shouldn't have anything to do with my insurance rate. You should just be insuring my car and if I have claims. No, but it is a very, very, very good indicator of how that account will perform. Losses and claims and payment history. Does that mean that every single person that has bad credit or challenged credit is going to file claims? Absolutely not. What we have in place, and a lot of carriers have in place, are things where if there's a extenuating circumstance like or a life-changing event like the death of a spouse, involuntary unemployment, deployment, military deployment, we can make exceptions on that one and use the credit that was better at the time, or just look at it differently,
Right.
With a deeper view. But that credit's everything, man.
Gotcha. So let's transition, because I'm sure most people have vehicles and autos, but let's kind of transition to homeowners.
Mm-hmm.
That's a space, obviously, you all play in as well.
Yeah.
So as a homeowner, and we'll talk about the real estate investor maybe a little bit later, but let's talk about the homeowner, right? I'm buying myself a place. I have no idea, right? I just know I need to get insurance on it. What are some things as a buyer of insurance for my property? What are some things I should be looking at? What are some things that I should be considering in terms of my policy that I'm going to get on my home?
If it's a single family home, so one of the biggest things we make sure, if it's your personal home, is that you're insuring that property at least at 100% of the replacement cost.
Okay.
We're very close to it. We recently almost lost the deal because the insured came back and said, "Oh, well, Don, this carrier is $300 and some change less than you." And as we pulled up the quotes, it was because the other carrier had basically he was just insuring the loan amount. All right, which was lower than what the replacement cost was. So as I pointed that out.
Down, Don, I don't mean to cut you off. Break that down in terms of the replacement cost versus what a property may be worth, or how much it takes to rebuild it. Kind of talk about that a bit, because I think there's some unique differences there.
All right, let's just say we have 1,000 square foot home, a raised ranch or a bungalow, right? Typical home in Chicago, right?
Yep.
What area are you from in Chicago?
So an area called Grove Heights.
Okay, Grove Heights. I'm from West Pullman, as we've referred to it as the Wild Hundreds, right?
Right.
So let's use these three areas on this same exact home. And let's use the Gold Coast as the example.
Okay.
The Gold Coast, we have Grove Heights. You said Grove Heights?
Yep.
And we got the Hundreds, right?
Yep.
This house is built the same in all three areas, right?
Okay.
Now the market value is going to be different in every area, right? Because in the Gold Coast, the same home. Now I don't think they have any 1,000 square foot bungalows in the Gold Coast, but my example still stands true that
sure
that area is going to give you a much higher market yield, right? But the cost to repair those properties, outside of a few small conditions, it's going to be the same rebuild cost.
Okay.
Right. So when insurance to value is a thing that people really missed in the process, and you saw back in 08, 09, when you were in an inflated market, people over insuring homes.
Mm-hmm.
The carrier is only going to pay what the replacement cost is on that property. So that can either work for you or work against you. If you're underinsured, you can be left out in the cold in a large enough loss or a total loss. If you're overinsured, they're only going to pay you the amount of coverage that the policy really costs to replace.
How would I know that as the buyer? How would I know what the actual replacement cost of this property is if it burned down to the ground?
Mm-hmm. Well, they can give you an estimated replacement cost analysis.
Okay.
So we all use similar tools in the industry. They will actually calculate based upon the square footage of the building, if it's brick or if it's frame, if it's got 2 bathrooms versus 4 bathrooms. We're going to put all that information in there and calculate that.
Okay.
That should be presented to someone every time you do a homeowner's quote, not just the premium.
Got it.
So if we can insure under the replacement cost, but if the customer wants to do that, I want to explicitly make sure that they understand that, they know how that will work against them in a claim. Okay. And that's the piece that's missed too. Also on the homeowner's policy, a lot of times when people are rushing through the process to close, they might leave off certain endorsements for sewage backup or sump pump failure. If you've got a finished basement in Chicago,
right,
or in most places, you might want to add that coverage. And they say, "Oh, we'll do it after we close." And they may never come back.
Right.
What I'm seeing a lot of right now, some of our competitors they're requiring that the customers, if they don't do multi-line, some of the carriers are doing like 1% deductibles, 2% deductibles. So a 1% deductible on a $350,000 replacement cost on a house is a $3,500 deductible.
Right.
You might not understand that until you have hail damage on your roof, and now to replace a $10,000 roof, $3,500 is getting eaten up by a deductible.
Right.
You know, so the thing about insurance, man, it's nothing sexy. It's nothing fun. When I'm doing a home buyer seminar, like at least when with the home inspector, you're walking through, you're talking about different things. With the real estate agent, they drive you to different properties. But insurance, it's just like, I need it.
I need it. Right.
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 It's like, just give me the cheapest thing. Let me close. So, you know, that's the part when we get there. And then the thing that drives me craziest right now is we got so many folks refinancing. And I think we get advised by professionals that we need to stay in our lane. So when it comes to mortgages and certain things, I stay in my lane. Right. When I operate in insurance, I make sure I stay in my lane. And telling someone that, oh, that may be high or you're missing this without looking at the full picture.
Right.
That's huge too, man. And the bundling piece, saving money. There's also discounts that we offer if you have camera systems, you have alarm systems.
So give me that. Those are other ways to save. System, alarm system.
The credit's the important piece too. The bundling items, and then endorsements that you would add on that would add coverage. So endorsements are anything that would add coverage to the policy, and exclusions are going to be anything that's going to take coverage away. So, and the average customer is not going to read through a 40, 50 page policy declaration.
Right.
But when they sit down with that person, and most of ours have been virtually, Zoom calls, I'm still pulling up the replacement cost analysis. A lot of times we're pulling up the quote, we're going through the deductible. And if they want to take something on or put it off, we will have different scenarios inside that quote, how it works for them or could work against them in the event of a loss.
Okay, got it. So let's flip over to, so we're still going to stay on the home piece, but I'm sure there's a number of folks that are listening that they rent, right? So I don't own the home, so I'm not concerned if something happens to the roof. I want my landlord to fix my roof, right? If it's leaking, I want them to fix that leak.
Right.
As a renter, are you a big proponent of rental insurance? And if so, kind of talk about that and just what does that cover if I'm a renter and I get rental insurance?
Man, we see this every year around this time and the holidays. There's some big fire and some huge apartment complex and people are displaced. They don't have anywhere to go. They don't have renter's insurance. It's huge, man. And if you think of a homeowner's insurance policy and you think of a renter's policy, outside of some endorsements, the key difference is that a renter's policy, you're not insuring structure. You're not insuring a structure, right? Both policies, you're insuring your personal items. Both policies, there's some liability coverage. Both policies, there's some medical guest coverage for people that come into where you live. And then there may be, some endorsements here and there for sewage backup, sump pump failure, which you can have on a renter's policy as well. But a lot of folks think that they don't need renter's insurance because they don't own the property. And that's just not true. So if your property, if your house or your apartment catches fire, in most cases, your landlord is not responsible for that. And they don't have to pay for any of your items. If someone breaks into your property, you have the same exposure of someone that will break into a homeowner's policy, someone that owns the house. And oftentimes renters policies are so cheap.
Yeah.
You know, renters policies that's $8, $9, $10, and they get $20,000 in coverage. But I would say the average price is probably $20, $25. And really you would do yourself a service if you have auto insurance with your carrier by bundling it with renters, because a lot of times you're going to get a free policy anyway.
Right.
But we don't sell it in that way. We sell it from the need standpoint. And the renters piece is really a part that I think a lot of folks miss. It's not that expensive. And it's good coverage to have. Even in that point in your life when you're renting and you don't own too.
So let's take a scenario. Let's say I am a renter and I live in a 3-flat, right? Somebody breaks into my unit. They steal TV, clothes, etc. They steal a number of things, right? My landlord has insurance. I don't have any rental insurance. Am I SOL or is it money going? Am I able to lean on my landlord's policy? What's my scenario there?
No, because most times if a landlord has any contents coverage on his commercial property, it's going to be for like furnishings, like a refrigerator or a stove. They typically don't have. So if we write a rental property for a building that someone owns, we're typically insuring the structure, liability, those type of things. You are SOL. Is it? Yeah, SOL. Yeah, basically those items are gone. So I've seen where some landlords will help their people out, but think about too, if there's a fire and you're displaced. So a renter's policy can also cover loss of use. So what are we seeing right now in Texas, right? A lot of people that are renting that didn't have that they got water damage in the units they're renting, the houses or apartments that are uninhabitable. They don't have a place to go. And I talked to a good buddy from high school today. They had moved to Florida, so they were renting out their house. That house sustained damage because of the power outage and things like that. So their tenant is having issues at the house, but then the place where they're renting, because they have moved back, they're in a hotel right now, and they're gouging the prices on hotels down there. So insurance is such a piece, and I think our community especially, we need to slow down, really understand it from a holistic standpoint. Life insurance, home insurance, auto insurance, insurance for your business, and making sure that if something happens that you're brought whole again. I actually personally hate telling a customer something's not covered or denying a claim. And if we do get to that point, I don't want there to be any confusion. They'll say, "Hey, Don, yeah, you know what? That's right. We opted out of their coverage." Yeah, they might not remember that from 14 years ago when I sold them the policy. But if we've had reviews, policy reviews, those annual reviews, then that's something that's been revisited. Got it. What do you think is going to happen when all this snow starts melting?
Accidents.
Yeah, but even on people's homes, like the claims that we're having today, are really from the weight of the ice and the snow, and the ice damming coming back under the home, and the heat inside the roof is heating that up and bringing it back in the house. But when we get a 30, 40 degree day next week, my crews are busy today, man. I probably have people at least 7 or 8 claims just today, from yesterday today. Serve Pro and some of our other partners that we use. So next week, when we get the thaw out, I'm not telling anybody to call the insurance company and add on any coverages.
I was about to hit you afterwards, like, yo.
I'm not saying that. Well, there's typically a waiting period if you add on like a sewer backup and sump pump failure coverage. So you have to wait 14 days for the coverage to be effective.
Gotcha. So we've talked about the auto. We've talked about home insurance for homeowners, and let's make sure that now we pivot into the world of an investor. Right. And that's something that I know me and you talked about a little bit ago, right? Because I just picked up a policy. So talk about that, right? So I'm getting ready to do a few fix and flips, and I've had buy and holds before as well. You've insured me in both cases.
Yeah.
Let's start with the fix and flips, right? The ones that we're not going to have that long, et cetera. What sort of policy should an investor that's doing a fix and flip 3 months, 6 months, et cetera, what should they be looking at, and how does that policy differ from if I'm doing a buy and hold?
Typically, you're going to be looking at a builder's risk policy. So property that you pick up that will be under construction. You may have raw materials moving in and out of that building. It's going to be locked and secured by the contractor at night, and either checked on by you. But we know that it's vacant basically.
Okay.
Different from a homeowner's policy, because if a homeowner's policy is vacant, typically for a prolonged period of time, even on the commercial side where you would have a rental, typically vacancy charges will come into that, and exclusions could come in there too. So specifically, if you're picking up properties that you're flipping, you will have a builder's risk policy. Sometimes people just do the vacant and they take the risk on it. They just do a vacant. We'll do right through a company called Vacant Express, and they making sure that basically they're worried about like liability claims, things of that nature. But that's pretty much the game on that one. So we'll find out what the purchase price is, the amount of rehab that's going to go into there, and then I might advise my clients to say, hey, you know what? Make sure you secure the property, put an alarm on there. Back in the day, you would have, somebody from the neighborhood just stay there while it was getting fixed up.
Indeed.
Yeah.
So you mentioned a vacant express. Someone may try to do a vacant express versus a builder's risk, I think is what you said.
Vacant Express is it's a company that we write through. It's underwritten by a company called J.H. Ferguson.
Okay.
And they will allow us to do a vacant property policy. Like if, let's say it's light construction and the owner is going to be doing some of the rehab. It's not as robust and complete as a full builder's risk policy. Builder's risk policy might be 6 months or it might be a full year. We write those through Zurich and a couple other carriers. And those are going to be a lot more expensive. Those could be.
That was my question. Yeah. Why would do? So they would do the Vacant Express. I understand, but they would do that because that's going to be a less expensive policy.
Yeah, and they might not be keeping a lot of stuff on site every night.
Okay.
They know that they're concerned if the building were to burn down, essentially. They're not as concerned as materials moving in and out of the property. They're looking at some liability risk, and they willing to take that. Like if it's some single family home that you picked up for 20-30 grand and you're gonna be dropping 20-30 grand into it, your flip time, your turnaround time is 45 to 60 days. But anytime my contractors tell me whatever they tell me, I already know. If they say, Don, it's only gonna be 3 months, I just say, okay, let's do it for 6 months. They say 6 months, I know it's gonna be a year. I've been working with contractors and the trade folks for the longest time, and usually they're not finished with the other project before they start in the next one.
Right.
So whatever they tell me, I advise them to double it up. And when they don't listen, I just make sure we collect the renewal premium.
So for that real estate investor, are you covered with either policy? Are you covered on the guy breaking in, taking the, once the copper pipes get in, et cetera? Is that covered under those policies? And if there's a way to cover those types of things, you put a new furnace in and somebody takes the furnace. Is it a way to cover those things?
There is, but there's a difference between vandalism and theft. Right? Okay. So if I break into the property, bust up the walls, cause damage to the property, that's covered, right? But if I have a policy where that theft, they steal the furnace, they steal the AC, they take all the pipes out, and they steal a bunch of stuff out of the property, including like some raw materials, you may or may not have coverage on that, depending on the policy you have. So you got to pay to play, man. You know how it is. I mean, you have to pay to have the right property, and I see a lot of I see a lot of contractors take the risk on it. But if somebody's there every day, property secure, they're checking on it, they're not leaving a bunch of materials inside of it, it might not be a bad strategy. If your goal is to kind of get in and out of there, but if you're doing a gut and you're 6 months to a year, you're dropping your kitchen and plumbing and everything else in there, I mean, it would be my advice to properly insure your investment.
Right. Okay. So let's talk about a buy and hold, right? You're buying a place, maybe you do some rehab, you fix it up, you've rented it out. Should I be looking at that property, that investment property, the same way that I look at if it was my personal homes in terms of coverage, et cetera, or should I be thinking differently about how I insure that property?
Yes and no. So I would say it depends on, could be like, what your personal goal is. If it's a 3-unit building that's rented out that you have bought 400 and let's say you put 250 in it, you might want to ensure that the full replacement costs.
Okay.
Depending on the age of the building, though, most carriers, unless there've been significant updates and upgrades to the building, a lot of buildings in Chicagoland are 1920, 1910. Right. The carrier is only going to go ACV, which is actual cash value, a lot of times. So there'll be depreciation inside of there. So the only way we would substantiate that on replacement costs a lot of times is if saying like, this person's put a lot of money into the building and we have photos that we have to submit over to our underwriting department. They're a lot more meticulous on that side of things to making sure that we don't have a moral hazard. You bought a building for 100, and you just drop 3 tenants in there, and you insured it for 900,000 on the replacement costs.
Right. Break that term down for me, Don. You said actual cash value.
Mm-hmm.
What does that mean?
So when we talk about replacement costs and we talk about actual cash value, we kind of talked about replacement costs with the strategy with those 3 buildings, right?
Yep.
They're all costing the same to rebuild.
Yep.
Actual cash value will take today's whatever the replacement cost is, and it'll depreciate down based upon the age and things like that.
Got it.
Think of a vehicle, right? A vehicle is essentially insured at depreciation, actual cash value, right? But it's not quite, because it's an auto, but kind of the same scenario as far as how a claim will come to be paid out. So if you underinsure too, and then you're at actual cash value, partial loss or total loss could really depreciate the amount of a payout that a carrier will make to an insured.
Got it. Okay. Makes sense. So as we get ready to wrap, biggest mistake that you see individuals make when it comes to buying an auto policy?
They're underinsuring based upon they're insuring for the type of vehicle that they have.
Okay.
Really, when you should insure, thinking about uninsured motorists, underinsured motorists. So when you look at your policy tonight, or whenever you see this, the first line that you'll see, it says bodily injury per person and per accident and then property damage. So it'll be those 3 up top, right? That's what's going to go out to the other party, right? Typically in most states, if not all, that number for uninsured, for bodily, for per person and per accident carries over to your uninsured motorists and underinsured motorists. So regardless if you're driving a 92 LeBaron or you're driving a Tesla like my man here, if you get into an accident and you have full coverage, your car is going to be repaired, right? But if you get into an accident and you cause bodily injury harm to the other party, or you get involved in an accident where this bodily injury harm caused to you or one of your passengers, you want to make sure that you have enough coverage. So typically what we'll do 250,000 per person, 500,000 per accident, 250,000 in property damage. We'll layer that with a personal liability umbrella policy that will extend liability both to you if we add on certain endorsements, the other party, and then also like at your home, or we layer all of that because we know at the end of the day the payouts in Chicagoland,
right,
huge, man. They're huge. I did want to go back to one thing we were talking about on the rental properties, though.
Okay.
If we have time.
We do. So
what I see right now, the Airbnb, the VRBO, that's huge right now. And a lot of people are not alerting their insurance care companies. And some companies don't have policies for short-term leases. So if you have one, you might want to partner with a carrier. Your carrier might already have it, but you might want to partner with a carrier that can give you those adequate coverages. At least let us know. So we asked that on the application, but things have changed. You might not have reviewed the policy.
Got it. I'm glad you brought that up. I actually had a young lady who, she has an Airbnb business, right? And she talked about that. And so an individual that has let's say their own home, but they're using it for Airbnb, that is something they need to reach out to their insurance provider about.
The personal home where they actually live at? Yeah, for sure.
They should. And what is that? And I know it's case by case, but if you just kind of gave an idea of a percentage of how much am I increasing my insurance? Because if I'm doing it for a business, let's say I'm not just doing it for a little extra cash, but I'm going to build a business. I'm going to do my home, and then I'm going to start to maybe work with friends, et cetera, who have places as well. What is that sort of uptick in the general sense? Am I paying 10% more? Is it 20% more?
So I don't want to talk around your question.
Yep.
But it really will depend upon. No, I know, but it will. See, this is what insurance folks do, huh? No, it depends. It depends on the carrier, because some carriers. So on our commercial side, right? I can insure somebody that does Airbnb, and I'll get back to the personal. But our minimum deductible on that building is $2,500, right? And it's other guidelines that are inside of there. typically, if you're doing, Airbnb or VRBO, we can get it done. But on the personal side, it's really going to depend upon the carrier, because a lot of carriers might not want you renting out your personal property where you actually live at.
Got it.
I mean, like, because think about it, like, say, oh, DJ, you want to get as much business as you can. Like, yeah, I started when I was 27. So naturally, right, and when you have a business, they say you're going to write 10 years in front, 10 years behind. Right. My first claim was actually one of the Noops driving out to Jersey, totaled this brand new Nissan Maxima. So I was writing a lot of people in my inner circle.
Right.
My claims naturally were higher. Right. So one of the guy that hired me, this guy Caesar Penzon, he's an executive now in corporate. But when he told me something, when we sat down at that conference table and they were finally making me my offer, he said, Don, the philosophy that you should always follow is that it's got to be good for the company, it's got to be good for your agency, and most importantly, it's got to be good for the customer. So I try to still live by that. Definitely, first and foremost, taking care of the customer, but I want to put good risk on the books too, right? I want to put good things on the books where that I can pay your claims, that there are no problems. Because if I do a good job as a frontline underwriter, it's going to help me to keep my rates low for my customers. And that's how the agencies really should operate, and being honest with customers, not just skimping down on the coverages or giving them high deductibles, just trying to churn business. We want to make sure that if there's something that were to happen, that we can take care of you, man. And that's how you do business. And slow and steady, take care of the customers that you got. Definitely, we're looking to bring on new policies, but what we want to make sure is that it's a fit for everybody.
Hey, brother, this has been a great conversation. A lot of nuggets, a lot of jewels. This is everyday stuff. You know, one of the reasons that I wanted you on is because insurance is everyday stuff, right? You get it most times as you got to get it, but you hit on something about the research, checking out, the relationship. My guess is a lot of people just, you signed up, you had to get it. You may not know who to talk to. You may not be doing the annual reviews. You're not focusing on your credit and how that's impacting you. So there's a lot to take away from anybody that's checking this out. As always, make sure that you all continue to support the Droppin Knowledge Network. Share it with a friend, share it with a buddy. Share this if you're watching this live on Facebook. If you're checking us out on Apple or Spotify or our YouTube pages, make sure you continue to share. Each week, we drop these episodes essentially so that you can go back to, right? So the next time you go buy that vehicle, before you buy it, you can go check out the interview of the Droppin Knowledge podcast with Don Murphy to make sure that you buy smarter, you insure smarter. And so, Don, I appreciate the insight. I appreciate the information. Probably need to circle back with you on a few things, make sure I tighten myself up. But for everyone else that continues to support us or continues to support us, the love is appreciated. Don, thank you for coming on today, brother.
Thank you for having me. And thank you for the platform that you created.
Indeed. All right. So catch us next week. 3 more new episodes. You have the new show, Building While Black. You have our new acquisition of Empowered with Sharonda. And then you also have our flagship show, the Droppin Knowledge Podcast. So continue to check in with us. Peace out. We'll see you next week.